Thabo Molefe, and they call me head of something, but what I know is that I'm the person who runs around every time there's a problem in one of the other 7 countries that Lee also looks after. So those 7 countries are Kenya, Rwanda, Malawi, Zambia, Botswana, Namibia, and Eswatini. So it's quite a big territory, right? And there's one thing key that we have actually noticed and seen across all the 7 territories is that we've been talking about is digital transformation. And particularly, we're going to talk today about you in Namibia. What it has done that we've noticed and realized is that it's actually revolutionized and changed how financial services are delivered, particularly to those underserved members of society, right? Each population, particularly African populations, have huge and vast numbers of people that are underserved, right? So that's what digital transformation has done. But the other thing in addition to that is that it's also created a platform, okay, for microfinance solutions that are technology enabled to suddenly start playing a very crucial role in driving financial inclusion and bridging that gap that we've been talking about since this morning. And consequently, the positive consequence of that is that individuals and small enterprises or micro enterprises that were previously excluded by formal banking systems and now have access to financial services, right? So that's a very critical thing. I think that we see being played here. So in the session, what we're going to do, we're going to look particularly at the rise of the microfinance institution and solutions in Namibia specifically. And we want to talk about very specific things here. We want to look at the progress that has been made in policy. That's why we're going to have somebody who comes from the regulator here with us. We're going to look at policy, we're going to look at regulation, we're going to look at infrastructure, we're going to look at products that are out there that are available, and we'll also look at applications, processes, and business models that are crucial to the promotion of financial inclusion, and how we can go about and how they've gone about creating a seamless digital onboarding experience for populations out there, right? And we also want to consider some of the challenges that are faced by these digital financial institutions, these providers. We want to also highlight the importance of supportive institutions that work with them and in the frameworks that are put in place. Look at any of the coherent financial architecture that is out there for startups, digital startups, and the like, right? I'm not going to do this on my own. I've got a panel that I'm going to be with, that I'm working with here. And they are going to help us unpack this topic, empowering tomorrow's economies, the intersection of microfinance and digital transformation in bridging financial inclusion in Namibia. Quite a mouthful. Right? I thought I'd memorize that, but I decided not to do that. So it gives me great pleasure to call and introduce up front our 3 panelists. The first is Chris Botha. Chris, come up. I'll read his CV. It's a long CV. And I said I'm going to read it. I'm not going to try and memorize it. Chris is the CEO of IDToday. It's a KYC solution. Before I read his CV, let me call the next one. The next panelist is Saara Shivute. She's the head of specialist finance at Bank Windhoek. Yeah, welcome, Saara. And last but not least is Imanuel. Hawanga. Imanuel is Deputy Director of Site Analysis with the Banking Supervision Department at the Bank of Namibia. Now, down to those illustrious CVs of theirs. Let's start with Chris. Chris, it says here that you have an impressive track record in entrepreneurial and assurance sectors. You co-founded PayToday, a mobile payment solution that was acquired later by Nedbank. I'd like to create something that can be acquired by a bank. You know? That just sounds amazing and impressive. Prior to this, I believe that you ventured into the startup world. You gained the senior audit experience at top accounting firms. You served at Deloitte in Luxembourg and KPMG in Namibia, and you're a chartered accountant.
Yes.
Wow, impressive, right? So it's a blend of expertise that Chris brings to the fore. And glad to have you on our panel, Chris.
Thank you for having me.
And on to Saara. Saara, you and I are called head of something, so we must be important people, right? Saara has vast experience in Namibia's banking, microlending, power and telecommunication industries. You've had roles such as in operations, sales and distribution, retail banking, specialist finance, security services, branch build and premises maintenance, credit control, and procurement. Jeez, what haven't you done? What is that you haven't done? And as the head of specialist finance at Bank Windhoek, you drive overall strategy with the specialist finance branches of property finance and vehicle asset finance.
That's correct.
Impressive, impressive. Wow. Well, there's a whole lot of stuff here. And you've got oversight and leadership of what? BW Finance? I believe it's a company owned by what? By the bank specializing in, by the bank itself, eh? They specialize in microfinance. So you're a microfinance specialist as well. Glad to have you. Thank you for joining us. Saara also holds an honors in business management and bachelor's degree in economics and a certificate in executive management program for retail bankers. So she can also teach bankers how to do stuff. And Imanuel, I already said he was the deputy director of off-site analysis with the banking supervision department at the Bank of Namibia. He started his career in commercial banking in Namibia with First National Bank, Namibia, and Nedbank. I've always wondered how people move from one bank to the other. It's very interesting, right? In 2008, I believe you joined the Bank of Namibia and you grew through the ranks, and that led to your current role, which you started in 2018. So he's quite a veteran already in his role. Imanuel is responsible for offsite monitoring of banks, credit bureaus, customer complaints handling. So we're also monitored and under his directorship. So I need to behave here today. He's an associate member of the Microfinance Association of the United Kingdom and a member of ISACA, a global IT association that's focused on building digital trust. So you're just the right person here. Imanuel holds a master's degree in banking and finance, and honors in microfinance and a degree in economics. So it's quite an erudite bunch that I have here with me. Well read, eh? So glad to have you here. And let's get into it. I mean, as you've already heard, the topic that we discussed, that we're going to be discussing, and my opening statement was about how digital transformation has driven, the way financial services are delivered in the country. I mean, are delivered to underserved populations, particularly in Namibia today. That's what we're going to talk about. Where would you say we are as a country and as an industry? Just quick view from each one of you. Chris, starting with you.
I have to go first. Saara, aren't you going to go first? I think there's been a lot of digital transformation in Namibia. I think there's still a lot of challenges, as pointed out in the earlier discussions. But I think, I've been quite involved since we launched IDToday, I think in 2017. And I'd like to think that it sort of was the start of quite a lot of innovative solutions that being launched in the Namibian market. So, but the reason we're here today is financial inclusion, so challenges remain. I think there's still some way to go.
Yeah, Imanuel?
Thanks, Thabo. From my side, I think in the regulatory space, we try to come up with various regulations and standards in order to accommodate digital innovations, but we don't want to stifle any innovation. So you'll always see that regulators always follows digital or innovation developments, and with that, there's still a backlog in terms of people being financially included. We try to bring on some institutions way back. A particular bank have failed in that regard, but with the revised framework, we try to accommodate new microfinance companies, and that will foster financial inclusion.
Yeah, okay, interesting. So we'll delve deeper into that. Saara, your view?
Yeah, no, I would definitely say that it's work in progress. Yeah. From a Namibian perspective, I would say that what we have probably almost perfected is the microfinance to employed individuals, so more to the salaried. But when it comes to the people that are, or the consumers that are in emerging markets, it's still something that we really need to unlock. So from that perspective, I would definitely say that it's work in progress.
Work in progress, okay.
Yes.
So there's consensus around here. So whilst we have the mic, Saara, we already agree that digital transformation has changed the landscape of microfinance, right? So what would you say the key benefits and challenges have been that have emerged?
Okay, so I would definitely say that it brought about the evolution of innovation.
Okay.
from a global and also from a Namibian perspective. And I would like to touch on three key benefits that evolved. The first one is it unlocked the world of financial enablement.
Yeah.
And by that, I basically mean that we digitized existing processes, procedures, as well as products in order just to bring in some efficiency. The credit scoring models were also developed in order to automate that process and deliver instant value to customers. But it also then gained us access to other financial solutions. Secondly, I would say that it brought on board non-traditional players. For example, fintechs, we've got Chris here, and we've also got MNOs, like, for example, telecom in the form of TN Mobile. We've also got MTC. So all those are players that are now in the microfinance industry that were previously not role players. And that has basically introduced new channels of engagement, also here in Namibia. Because from the palm of your hand, you can basically send a wallet, receive a wallet. You can do full banking in the comfort of your home. The third change that has happened globally is basically financial inclusion. And that is what I referred to earlier as a component within our market that we definitely still need to work on.
Yeah. And Saara, you mentioned the fact that it's introduced new platforms, and those platforms come with risks, whilst they also introduce opportunities. Can you just touch quickly on what those risks are and how those could be mitigated?
All right. So in terms of risk, I would say is the potential of hacking, phishing, and vishing.
Yeah.
So we as institutions definitely need to make sure that we comply to all the payment regulatory aspects as well as the standards. And then, of course, also adopt the best practices. It's also important in terms of that, because we need to ensure that, for example, we have encryption, we also have two-factor authentication, etc. And then, of course, the reliance of payments through name switch, especially when there's downtime. There's also then a dependency in terms of that, because there can be delays. But we need to ensure that a redundancy network infrastructure is in place. Claims because of malfunctioning hardware systems and software systems. And to mitigate that, we need to make sure that if there's a power outage, we at least have backup power. And then lastly, in terms of payments to wrong, for example, accounts or wrong cell phone number, for us, it's important to make sure that there's a secure and digital solution in order to identify the customer.
Interesting. Chris, I'm going to come to you. We already spoke about how you started Pay Today. What role do you believe mobile payment solutions play in expanding or driving financial inclusion?
I think in the earlier presentations we saw the amount of, it's the first time I've actually seen that statistic that 52% of Namibians have access to smartphones. So, you know, you can, if you're looking at the target audience of the underbanked, most of them actually have access to some form of mobile phone. So I think it's absolutely crucial that any discussion that surrounds financial inclusion almost revolves around the mobile phone. And the mobile phone is just such a wonderful tool to promote financial inclusion. I think personally, I think there's sort of three key aspects to a good financial product for the underbanked, and it must be affordable, it must be accessible, and it must be understandable. So of course a mobile phone is very accessible, and it's affordable because it's a digital channel, and then ultimately the mobile device is a communication channel, right? So you could send information to thousands of people, educating them about the product, and then instantly allow them to communicate back to you if they have any questions. So I think it's absolutely pivotal.
Interesting. And let's talk a little about mobile payment solutions and how those can be designed or be better designed to cater for the unique needs and challenges faced by micro entrepreneurs and individuals that are particularly low income individuals.
Yeah, I think I think we learned a lot of lessons with Pay today, mostly what not to do. But I think it's super important, especially in the context of the underbanked. They don't have a lot of purchasing power. Yeah. So that when you're designing your products, to think about products that are, I read this somewhere else, this is not my analogy, but that are painkillers and not vitamins, right? Because vitamins are something that you need to take for a very long period of time, and if you do that, eventually it will give you some benefit. You'll feel better or live longer. Whereas a painkiller is you have a headache, right? And you need that headache to go away now. And a painkiller does just that, instant gratification that was also mentioned.
Instant relief, eh?
Yeah. Yes, exactly. So I think it's important to understand the problems of the micro entrepreneurs and the underbanked and say, which of these problems need vitamins and which problems need painkiller solutions, and it's the painkiller solutions that would work best. I think maybe just to add one story from Pay today, we launched our person-to-person payment solution in 2017, and it allowed you to pay anyone on your phone as easy as sending a WhatsApp. But the problem is that because we were running on the existing bank rails, the payments were not instant and you couldn't cash out. And that was, it was a convenient solution, and what the market really needed was a painkiller solution, which is to pay, it must settle instantly and you must be able to cash out. So I think that was the key lesson for us there.
Okay, thank you. Imanuel, just from your regulatory point of view, can you just outline for us the key requirements for regulatory requirements and challenges for digital microfinance initiatives and specifically mobile payment services? Right, that's one part of it. And how do you strike a balance between innovation and consumer protection? Because you mentioned that a little bit, not stifling innovation.
Yes, thanks, Thabo. With that, there's always license and regulatory requirements when you want to start a mobile payment or financial institution being driven by a mobile company, or whether you want to form partnership with existing financial institutions. And this is guarded or regulated by us as the Bank of Namibia, and if it's non-bank, it's in the space of NAMFISA being the non-bank regulator. But it's always the ultimate factor. It's driven by your business model, feasibility of business model, which is very much, if you come into the financial institution space, it's very much capital intensive. And by it being capital intensive, there's always a requirement or rather a recommendation from regulators for mobile financial services to form partnerships with existing licensing and financial institutions being banks. That way they are able to run the business and also present then a feasible business model. There are various challenges, but I would like to cover, say, 3 of those challenges. One of them is the KYC. Many of the speakers spoke about your customer requirements and anti-money laundering requirements that is always put in place. And that is mainly to verify your customer and also protect the customer identity at the end of the day. And through that, you ensure a sound financial system. The second part, I would say, it's financial literacy. You've seen a lack thereof in our market. With the need of financial literacy, you want customers not only to use products and those digital services, but to use them effectively and also in a secure manner. With any type of business, as much as you innovate, there are certain risks like cybersecurity that we have heard about. There's a rise in frauds. And so many times regulators are then forced to come up with mitigating measures, to come up with standards in order to protect not only customers but also protect the system. So regulators will come up with cybersecurity standards, regulations in the various forms of circulars, determinations. And that we have done in the space of not only Bank of Namibia. Last year we've launched the Cybersecurity Council. That's a flagship not only for the bank but also for the Ministry of Information, Communication and Technology. And CRAN is actually the custodian, but we have as the Bank of Namibia, gone ahead and drive this process, and we have established it for the financial sector, and hopefully all the other sectors will follow suit. There are certain other developments in the space of NAMFISA, being the non-bank regulator, that will also come up with cyber standards, and then CRAN leading that front also in the telecommunication sector. But what is also important is interoperability. As much as you have systems in order to allow for financial inclusion, various financial institutional systems need to speak to each other in order to draw the correct information, ensure security, and through that, there should be a common standard at which all the institutions are operating. And that necessitates regulators normally to come up with interoperability standards. And that's also a work in progress. It's one of the visions of our national payment systems in order to come up with an open, what they call an open banking platform for the next 2 to 3 years. But in order to strike a balance, regulators needs to cooperate with or work together or coordinate with financial institutions, and that we can do through forming regulatory sandboxes, collaborate with fintech companies, set up a virtual sandbox, look at the models within which they are operating, see what's the impact on the customers. In line with that, you come up with standards in order to not only regulate these fintech companies, but also protect the consumers which they would engage in. Another one is to adopt a risk-based approach. As much as you want not to stifle innovation, you need to set a mark in terms of classifying then whether a business is low risk or high risk, and then you concentrate your efforts more on the high risk areas of a business, and you allow more flexibility for low risk innovative models in the regulatory space.
That's great. That's great. Thank you. You've anticipated my next question, because I was going to talk about, I was going to ask you about how you actually foster that make sure that happens. So, but anyway, let's move on, because you've actually dealt with that. So I want us to look at actionable strategies to manage, to drive inclusion whilst fighting fraud. Because as we grow with digital transformation, that brings along the risk, and Amrita spoke, everybody spoke about it, right? Sarah's been talking about it, you've all been talking about it. The increased risk of fraudulent activity and the cost thereof, right? There needs to be a balance between these innovations and protections at the same time, but making sure that there's regulation as well in the same place at the same time. So it's a difficult one. Let's go to Chris. Chris, we already know that when you started your Pay Today initially, you were aiming at a different market.
Yes.
If you had to take a clean sheet and start afresh today, looking specifically at the underserved and these generally excluded members of society, what strategies would you employ to ensure security and accessibility of your platforms, especially for those people that have got limited digital literacy? You know, everybody's got a smartphone, but very few people can use them properly. So
yeah, I think it's a great question. I think firstly what we would have done is, as I mentioned earlier, targeted maybe a different market. We wouldn't have launched our own app. I didn't really know how expensive it is to build an app, maintain it, and then the marketing budget to get people to your app. So I think if I had to do it all over again now, platforms like WhatsApp excite me quite a lot. For two reasons, mainly, because if you think about WhatsApp and people that are not digitally literate, my grandmother struggles to, do anything on the internet, but she can use WhatsApp, right? So I think never underestimate how important it is that, most people, it's so accessible, right? It's already in their pocket. I don't know the statistics for Namibia, but in South Africa, I think 93% of people have access to WhatsApp. You don't need to migrate those people to your platform, your app. They already understand the basic functionalities, and with WhatsApp opening their APIs, there's almost not a service or product that you can't deliver through WhatsApp. And the same goes for the security, right? They've introduced two-factor authentication. It's got multimedia, so you can do biometric authentication. So I think that WhatsApp that would be one key change, is to change the way in which these services are delivered to the customers through using a platform like WhatsApp.
So you just reach them where they already are.
Yes, exactly.
And something of interest as well. I mean, if you look at yourselves as a mobile payment company,
yes,
and you look at microfinance institutions, what would you say are the biggest fraud-related threats and risks and challenges that you face? And how do you guys go about mitigating these?
Yeah, it's a big challenge, because you're always trying to strike the balance between making it as user-friendly as possible for the good actors, but then making sure at the same time that you keep the bad actors out. And that's a fine balance, and I think it will always be a work in progress. There's no one-size-fits-all solution that's the silver bullet. At IDToday, our biggest, to that point, right, we didn't ask people to enter their a password when logging into the app, because we wanted, you show up at a coffee place and you just open the app and pay after you've entered your PIN. But that did open it up to identity fraud and account takeovers, which we did mitigate later by biometrics and two-factor authentication. But like I said, there is no silver bullet, and it remains a challenge.
Yeah, well. And Saara, I'm just thinking about, how can MFIs and mobile payment providers work with regulators to ensure that their services are safe and secure?
For starters, I would definitely say compliance.
Yeah.
So that is mandatory. When it comes to regulations, everyone needs to make sure that from a regulatory perspective they comply, just in order to make sure that the customer's data is also kept safe. But I would also say that we need to develop tactical, for example, and strategic engagements so that we can foster whatever is going to transpire out of those discussions to ensure that from a microfinance institution perspective, as well as from a regulatory perspective, we actually combat cyber fraud, and we also protect the customer data within the entire financial sector. Okay. So that, for me, is very important.
That's the way to go about it, right? Yeah. Okay, interesting. Chris, would you agree?
Yeah, 100%.
Yeah.
No. Yeah. And I think there has been a lot of movement in that direction, so that's very encouraging to see.
Okay. And I just want to go back to Imanuel, and I just want to find out about progress that's been made in policy, in regulation, infrastructure, products, applications, processes, and business models, to promote financial inclusion. Do you think it's enough? Do you think we've made enough progress covering all those areas?
Not really. That's why we keep on trying to improve as to what is in place. You have seen last month we have revised, and the new Banking Institutions Act was passed. In the past, we used to have a uniform business model for all kinds of banking institutions that wanted to enter into our market. We have now created a specialized section or provisions in the law that caters for microfinance banking.
Yeah.
And it's deliberate. It's to drive low-income products and to have the tailor-made business model that you can tie then the supervisory risk or supervisory method to the particular business model that the microfinance bank will follow. In the past, we've also rolled out what we call outsourcing arrangements, into what we call through a determination, and that allows for expertise to come into the market, work with banks, and then design tailor-made products for customers that is basically sitting at the lower end of the market. We have also rolled out what we call agency banking regulations, and that speaks to the outreach, how banks can form partnership with merchants, have an outreach, especially for the underserved population, and then in accordingly manage also the risk that comes with it. And that mainly reduce not only the cost of providing the service, but also the cost of having the service available to the customers. The bank are now in the process of establishing a unified payment system interface that they want to provide really at a low cost or at a no cost at all for retail customers, where somebody without a bank account would be able to transfer or even accept money through a form of a wallet by having that interface in the larger financial system. That is really at the initial phases, and I'm sure everybody saw that being reported on in the various daily newspapers, and it's really at the tendering process. And that's the open banking paper, and that allows really for a platform infrastructure where financial institutions, especially banks, payment system providers, they will have a platform where they will share customer information. And as soon as you know there's an integrity part towards the customer information, I'm sure it will make transactioning very easily and also provide access to other products for these underserved customers.
And in a minute, or just under a minute, can you tell me, with specific focus on regulatory frameworks that you put in place or that you're putting in place that are geared at the driving financial inclusion, particularly focusing on digital platforms? Have you focused on that specifically? Yeah, you've touched a little bit on that, but is there something specific for that segment?
Yes, with outsourcing, along with it came what we call the cloud computing regulations, where you allow a financial institution to come up with digitally financial inclusion products, and in line with that, we allow you to kind of self-regulate, but then manage the risks of rolling out those digitally financially inclusive products.
Okay, and progress? What have you seen so far?
That one have been rolled out, but then as the regulator always involve industry, there have been various industry consultations, and with the passing of the new law, it will then be re-implemented and rolled out to the industry in the next 2 months.
Okay, that's good. There you go. So we've got 9 minutes and 43 seconds left, and I want to give you each a minute to answer this one here. How can partnerships between traditional financial institutions, fintech firms, and regulatory bodies be strengthened to advance the cause of financial inclusion through digital channels? How can we achieve that? Let's start with you, Chris.
Okay.
Yeah.
I think sharing of information is extremely important. I think that we all should recognize that we have a role to play in promoting financial inclusion. And if you think of, let's use the example of a digital bank account, right? The regulator can come with regulations that lowers the limits for KYC, right? So don't require KYC for amounts less than 5,000. The bank can, through open banking, as Imanuel said, allow their products and services to be accessible through a fintech platform, and then the fintech platform in turn, has the ability to innovate and provide the services at a much lower cost. So I think it's regular engagement and sharing of information, working towards a common goal.
Oh, great. Saara, we'll come back to the regulator.
Yeah, no, I would definitely say that collaboration between the various parties is very, very key to the success of it. In order to leverage the expertise as well as the resources that each of these institutions bring to the negotiation table, if we look, for example, at the financial institutions, they can contribute basically by bringing the established customer networks to the fore. And then fintech firms, for example, is innovative solutions and platforms. And from a regulatory perspective, I would say that it's important then to harness this relationship and also make sure that they provide a clear regulatory framework for these institutions, but also through that, also protect the customer interest and also the interest of the stakeholders. Right. And government, I think, is also very important because there are certain platforms as well. For example, even the Ministry of Home Affairs, like the IDs, if all this information, the data that is already within the network, within the country, can be digitized and accessible, it's also going to make the process much, much more digitized.
Right. Imanuel, there's a lot of challenge being placed on your
Yes.
shoulders. How do you respond to that?
I cannot respond without mentioning the word regulator. So, but we have to be collaborative in our response and have collaborative regulatory frameworks that we set out through regulatory sandbox and having regular consultations as Saara have mentioned it. We cannot do something without consulting the industry that we are serving. What is important for us is also consumer protection, but along with it, we have to have joint consumer education initiatives and also through protection, coming up with joint or common standards across the industry, and through that consultative process, we make sure everybody has a responsibility in ensuring consumer protection. In terms of data sharing, from a regulatory perspective, we can have a common platform, work with the likes of the credit bureaus, other national institutions, have common data sharing platforms, and then also through that ensuring that you create an alternative credit scoring mechanisms, because there are other forms of data, say for example in the health sector, telecommunication sector, that can be used through an integrated platform, but having that commonality and the same platform, I'm sure we can enhance financial inclusion.
Great. We've got 5.5 minutes, and I'd like to take some questions from the floor. What do you think? Any questions? Is there a mic that we can do quickly? Are there any questions? I'm hoping that there'll be questions. I see a hand there. Please just tell us where you are from and who you are. And then,
Good afternoon. My name is Lydia Kalilo. I'm from BFS Nampro Fund. I just have a question for Mr. Imanuel. I'm not sure if I understood when you said that you are bringing in the platform of like wallets, like e-wallets where businesses can operate from. I'm just asking, would that not be challenging, because for us, for our KYC and AML, we require businesses to submit their FSS and management accounts. So if businesses operate through e-wallets, how will this be recorded? Will you liaise with MTC, Telecom? Will there be a singular business registration with SIM cards? Or how will you mitigate this and control this? Because I think it will be a bit quite risky to be operating with e-wallets and wallets.
I'm sure you're referring to the open banking platform.
I'm not sure if you mentioned something about, is this on?
Is it a unified payments interface where we want to open the platform for customers that does not even have a bank account to be able to transact and also transfer and receive money. So that's due to cost. It's actually an initiative where the industry wanted to do, but due to cost, I think that's where the central bank, in partnership with other financial institutions, will take that initiative. Because whenever banks come up with digital services, I don't want to mention a specific product. The challenge have always been costs. There's always a cost towards setting up the platform. There's always a cost towards the end user being the customer using that. And that stifles really financial inclusion. So from a Bank of Namibia perspective, we are saying, let's set up the platform, let's cover the cost aspects, and let's allow people that are underserved to make use of this platform. And through that, also manage the risk in conjunction with other partnerships that will be formed in the process. So the bank will not run it solely. It will be with other partnerships.
Yeah. Any other question? There's a second question there, I think, from Junior. And I think that'll be the last.
Thank you for the opportunity. I think, again, my question is also headed for the regulatory body.
Say, Emmanuel.
So I am Junior Kavisip. I am CEO of FinFit Investments, financial wellness and financial education platform. So basically, we work with rural and peri-urban communities in terms of trying to educate them with regards to finances. the challenge and sort of also the solution that we have seen, but that we have not seen forthcoming, especially from regulatory bodies within Namibia, is that you have programs such as what is happening in Kenya, and I think the East Bloc of Africa, with regards to savings and credit cooperatives. And you have progressive policies and laws that enable this type of community-based credit, credit unions to be formulated, whereas you have villages and farmers that are now sort of full scale, have within their pool, say 200 or $500 million within their pool, but started off from humble beginnings. And they are now sort of dominating also the financial space within Kenya and the rest of the other African blocs. But that hasn't come through within the Namibian context. And what we have seen is that including these individuals at grassroots level and also allowing them to be part of the financial system must start from somewhere. But in many cases, we haven't seen that driven from either government side or from the regulatory body side in helping educate, but also helping drive a national sort of platform where they can be part of the financial system. So in terms of you, I know that back then there was a white paper, research that was done by the Bank of Namibia.
Julian.
Yes.
Julian.
Yes.
You've taken so much time.
Oh my goodness, sorry.
sounds like you're just making suggestions.
Okay.
Here's what I'm going to suggest.
Yes.
Here's what I'm going to suggest. Ask him the question.
Yeah.
When we're going to have a discussion at lunch, I'll join you guys because I'm interested in that question.
Okay, cool.
Yeah?
Okay, the question is,
yeah?
What happened to second-tier banking in terms of your policies? What do you think of savings and credit cooperatives in terms of your part and allowing rural and peri-urban communities to be part of the financial system? In a nutshell, thank you.
Yeah, thanks. So you will take that question so that we can just allow for the next space. Here's what I'm going to suggest. I think there are a lot of questions that are going to come up. That's a very interesting question because I've been involved with the SACCOs in East Africa as well. Let's take this discussion to lunch. It's going to be more interesting. But I want to take this time to thank each one of you and all of you for your time and for the time that you've taken to be with us here.